Welcome to the TMT stock market strategy video for Thursday, January 28th. A lot going on in the markets. We did get a little bit of a bounce. FOMC came in and just kind of capped that. They sold into the FOMC announcement. Economy's weak. A lot of dovish talk with the Fed. So we'll see what happens here coming days. Now, usually when we get a rally or any type of move, whether it be up and or down, on Fed Day, we usually get some sort of reversal. Today is Thursday. We get closer to the end of the week. Let's see what happens here. We'll take one day at a time. Markets haven't really gone anywhere other than straight down, and then we just kind of gyrated up and down a little bit at these lower levels. I'll show that to you in a moment on a daily chart. I want to just talk about crude oil. I want to talk about the dollar real quick. Fundamentally, there's a lot going on in crude. We all know that. A big glut, big build. We're approaching that 31.2 million barrel inventory number, which was last year. Big number. We usually come into a peak right around February, just before the driving season comes around, February, March, and then we should see crude start to go back up again. So I'm really watching closely for some long-term trades, some longer trades actually, in oil stocks. Not really the commodity. I mean, I wouldn't mind buying USO down here in the hole, kind of hold it for a few points. That's something that we'll definitely put out in the videos. But I want to see what's going on with the dollar. The dollar does create havoc on any commodity, and as you can see here, this is a daily chart of the U.S. dollar. I've showed this to you before, but I want to show you again. Here's this big bull flag that we broke out. Right now, the dollar is basically neutral. You can see here we're at the 50 percentile. Really not doing much here. MACD, same thing, but getting a little bit more aggressive. We take this high out here, then I think you're going to get another back test, and we're going to go higher. That's going to damper all of the commodities. Now, the reason why gold hasn't really had an effect is because there's a fear factor involved with the high volatility in the markets. Nowhere to put your money. They throw it into the REITs, healthcare, anything, consumer staples, anything where we create some sort of a little bit of a dividend, bonds, and of course the gold metal, gold. So that's something, the reason why I do think gold does head back a little bit lower. We'll see though, if once the volatility subsides and gold's still catching a bid, then I think maybe the short-term bottom may be near. I'm thinking 980, 990 in gold, and then of course we'd reevaluate. But you see the dollar here holding up very well above the 200-day moving average. Until its dollar starts to really break down, guys, I think you're going to have pressure in the commodity. Aside from having some short covering rally, I think crude oil will continue to be down here at these levels unless something major happens fundamentally. OPEC decides to stop production and we catch a little bit of a bid in crude oil. I'm going to show that to you now in the charts. Here's the monthly chart of crude. You can see we showed this many times. If we take out this 21 area, 22 area, you're going to see 16, easy 16, 17 bucks. I don't think that's way away, and I really don't think that's going to happen here. Right around here, about 16, 17 dollars. 22 needs to hold. You can see that here. And you can see we had this head and shoulders, right? Here's your head. Here's the left shoulder. Here's your right shoulder. And then, of course, your neckline comes right in right about here, and we broke that neckline. We did break down. We came back up, created another right shoulder, and broke. And this has been just a waterfall sell-off. So just keep in mind, guys, when you're looking to play, if you're playing the commodity itself, be very careful. There are a lot of shorts, but that does not mean that crude can't just wash out. We haven't really seen it. This, to me, looks like a washout, sure, but it's not a washout. When a commodity trades, it could really just rip right to the downside and then run right back up again, okay? Let's take a look at the daily chart. You can see that 2750 is going to need to hold. This is the lower end of our volume profiles. You can see here we have that thin zone, and now we're just kind of hovering here. As you can see here, we have a downtrend channel easily in place, and I would like to, this thing needs a lot of work. Let's put it that way. We need to see something like this, like a bull flag, and then a break higher. But right now, it has a lot of work. There's the 20. You got the 50 right there, and then you got a 38.8%, 30.2% retracement, Fibonacci retracement, along with some other fib numbers here. That there's a lot of overhead resistance. Okay, this means a lot of backing and filling. Don't buy the crude oil if you think that that you're going to go to 47 again. At least not at the short term. All right, so just keep that in mind, guys. All right, let's go right into the indexes. You can see clearly our support levels are holding really nicely. And at 81.87, right to the penny yesterday, we have the 82.25. And look at this. This is what I like to see. We have, again, remember I mentioned we should come right up above here, that trend line, and then break lower. MACD hasn't even touched it yet. Neither did the RSI, but the RSI has a little bit moving a little bit better. And this is what I'm looking for, right? This is that bear flag. And then, of course, we're looking for that break lower again. And again, I will be putting out some fib numbers when the market is right enough to when I know that we are getting a decent move. But right now, we're just chopping around here, guys. I mean, this is just an ugly-looking chart. And the other indices will follow suit. I'm going to show you are not pretty at all. There's that 97.50 holding well here. You can see that 97.50. This needs to hold. Again, that 20 is going to be the next area of resistance. And then, of course, look at this thin zone we have. So as well as it breaks down, it could overshoot to the upside as well. But look at this rally. All right. If you don't think volume is anything, think again, guys. I mean, this is absolutely diminished volume on an uptrend. Nobody cares. Nobody wants to. There's a lot of players that are caught. Let me just bring back this the SPY chart. There's a lot of players, a lot of traders, a lot of investors, swing traders. They're all caught right up in here into that 200, that 2000 in the ES, all caught right up in this area, thinking that we were going to break higher. And that's why I always say, wait for the market to tell you which way this market wants to go. All right, so that's why I don't think the market goes anywhere. Even if it does break higher, I think the market participants will sell into it heavily. Okay, transports again, big culprit here of this market sell-off, 117.70. Look at that thin zone. Look at volume, really, really weak. Again, that 20, and then of course that 50-ish, 132.40 would be the next area of resistance. But you got to watch the transports closely here. Diamonds, same thing, guys. You could see, repetitive pattern repeats itself in a lot of the other indexes that I'm showing you. Bear flag forming here, looking for that break lower right around this 20 area. Again, I'll put these upside targets once we get going. In the Pro Trader Premier video, I have upside targets for you guys already. So, lastly is the Qs. Apple was the big culprit yesterday. And you know what? When you trade in the futures or you trade in QQQ, obviously if Apple is heavily weighted, not as much as it used to be, but still heavily weighted, will bring down technology. Stay away from it unless you're looking to short a spot. Get a spot and then look to short it. But you can see here we have we do have some positive divergence right now, even though we had Qs go lower. But RSI did break back above. Look at that volume. Volume is just diminishing here, okay? You see how the volume increased on the way down, and now we have volume decrease on the way up. That's just very, very bad. Not a good sign at all. So just keep on your toes. We still have extreme volatility telling me that we are going to vacate the area, these value areas. Whether it goes up or down, we don't really know until the market starts to make a move in a big way. This upside move did not really do much, so I'm very suspect of this little rally that we're having. All right, so just keep caution, and let's see what happens in the next couple of days between today and tomorrow. Maybe we might get a little bit of a turnaround today after that Fed announcement. Have a great day, everybody. We'll speak to you tomorrow. Take care.